What's up, guys? Welcome back to Roensch Capital Charts. Today we're taking a look at Nvidia stock, ticker symbol NVDA, on a variety of time frames in anticipation of the next trading day, Tuesday, March 12th. All right, guys, quite the hold here actually on Nvidia stock here today. It is down from close to close, $17.54 a share. That is minus 2.0%. However, if you guys remember the weekend video uploaded Friday looking ahead to today, Monday, we actually covered that one late and after hours. The stock was right around 853 at the time of recording. And interestingly, today, we've actually closed a few points higher than that. So yes, close to close, it is down about 2%. However, if you remember that video, we talked a lot about just trying to see a hold from a bullish perspective, and we'll get to that later in the video. However, as always, these after hours moves, whether the stock is pumping or fading hard, you have to take it with a grain of salt because, look, volume is so low. If you look at a level 2 box after hours, I encourage you to do so. Any stock really, even Apple, SPY, you look at the big dogs, they really thin out. And you don't even have to be that big of a player to come in, put a little bit of size in, and these things move very easily. They become very thinly traded the deeper after hours gets. But all that being said, let's get started here, starting with our daily ritual. The volume profile analysis on the 5-minute chart, I think, is the best chart to do so on. By the way, if you guys are looking to try to expedite your trading journey, I think you'll find our private trading group. It's also an educational resource. I think you'll find that extremely helpful. You can take a look at that at the link in the pinned comment and get grandfathered in at the current rate. We've been running over 3 years strong now. Hope to see you join. So, the volume profile analysis. If you've seen any of these videos, you probably are already on board with what we're looking for. In case you're new, again, please subscribe to the channel if you wouldn't mind. But what we're looking for here is obvious changes in volume, but they have to correlate with obvious moves in stock price. Those moves that I kind of want to look at here, a few. Off the open, we saw some interesting volatility. I want to look at these 3 moves, and then these, like the pump and fade, kind of together, so kind of 3, 4-ish moves. And then I also kind of want to take a look at this fade just because of the consecutive red candles that we saw. Now, another thing, it has to be unusual in terms of the volume profile around the moves around it in comparison to the moves around it more so. But again, the part that I think most people miss, this has to be out of context of what is expected typically during that time of day on any regular trading day. So an example of this would be if you're in chat rooms, whatever tonight, and you're looking around, you might see a bear gloating about that big volume off the open and how in comparison to the reversal candle, the volume on the bullish candle was much smaller than the volume on the bearish candle, right? Well, no, unfortunately, that's not really how I like to look at these things. That's just completely losing sight of the context. We expect a big volume off the open, okay? So we can't go and just cherry pick whatever volume is the biggest, even if it is contextual on the day, and just say, see, look, I'm right, my bias is correct. We have to be semi-realistic of the context. Now, that is, if we zoom out, that is a relatively large opening candle. But we're not talking about 5 million shares in comparison to Friday's 2.5 million, right? The green candle over here. So, for me, I'm looking at the kind of dump and then the pump off the open. And these two are kind of a wash to me. Okay, they kind of cancel each other out, contextually speaking, based on that U-shape, that fade off the open that we typically expect. Now, this, 5 consecutive red candles here, a little bit into the trading day, the volume is incredibly contextual, so we can go ahead and get rid of that. We're just checking everything here, right? This green pump and fade. What's interesting is we did see a couple of green candles heating up, but we never saw that consistency. I like to see at least 3 or 4 candles, consecutive candles, with consistently higher volume that's kind of out of context, and we didn't really see that, so bulls, wish I had better news for you in comparison to that fade. We did see a little bit of rising volume, but it's not out of context enough to really look at that and say, hey, a much bigger sample size agreed with that move compared to the fade. It's not really the case, and we have to remain unbiased here if we want to actually get anything meaningful done. And this later day move, all these consecutive red candles here, they were smaller candles. If you take a look, we didn't really have any outlying candles in terms of size. It was just a lot of consecutive fades heading in there. And we look it started to look like there may be something there until that green candle broke the trend and definitively said, yeah, there's really nothing there to pick out. Now, I know some of you guys are going to have questions about this candle and say, whoa, isn't that really out of context? Well, the answer is kind of yes, because it actually meets the opening candle just almost, right? But the truth is, and if you watch a lot of volume profiles across a lot of blue chips in particular, in blue chips, this is, and Nvidia is, of course, a blue chip, right? This is very common to see a big candle, either red or green, on the first candle in the after hours. And what I think that this is rebalancing. Institutional and fund rebalancing. Now, every once in a while, you'll see some massive candle. It'll say like 8 or 10 million shares. Sometimes it's just big size rebalancing, and other times you have to be careful. Every once in a blue moon, if there's something that's really out of whack, it's typically, it's not uncommon to see it be the first candle in the after hours. It may be a data error. And what a lot of people don't understand is that there's, dare I say, there's almost a monopoly in terms of data on the street. A lot of these brokers, like almost all of them, buy their data. They have to buy their data, right? And if you want to build out a tool, you have to buy data. It's very expensive. But there are only a few places that you can buy actual good data. And all the brokers have to buy from these couple of places. So you'll notice in chat rooms when there's something weird going on, you'll have people cross-referencing like, oh, Thinkorswim says this broker says this, Webull says this, oh yeah, it's on Robinhood too. And I don't know if they all buy from the same sources, just using them as examples. And everyone says, oh, it must be legitimate because it's on multiple brokers. Not always the case. They may just happen to buy their data from the same source, and that source put out a glitch that got fed all over the place. You have to be careful. In this case, it's contextual enough for me to say, yeah, I think that's probably legitimate data. It looks to me like a rebalancing, though, because really, that candle in the after hours was relatively small, which tells me that there was a little bit of a battle going on there between buyers and sellers, probably some rebalancing, just pumped up that volume, happened to be a small red candle. Okay, now let's move on here to the 30-minute chart and start taking a look at the self-fulfilling prophecy psychological levels that I'm watching extremely closely tomorrow, Tuesday. Now, a few interesting things to look at here on the 30-minute. Remember, this is the 50 period, that white line, that gray line is the 200 period. Why do I care about these? Well, they're not magic. I'm not looking at them as some magic indicator. We're looking at them, and some of you that have been watching for a little while, you already know the answer, because of the concept of TA being nothing more, nothing less than a self-fulfilling prophecy. So, the 50 period and the 200 period are the most commonly used moving averages you can possibly put on a chart, and the 30-minute is one of the most popular charts you can put those popular indicators on. So there are a lot of people around the world looking at this exact chart that you and I are looking at right now, and I want to look at what other eyeballs are looking at, because other eyeballs and other minds are going to make decisions, because they anticipate others to make decisions, and are going to program algorithms to make decisions because they anticipate other people to make decisions around those levels. Okay? Now, in the video over the weekend, we had discussed how we had seen a little bit of a fade in Nvidia after hours. We had actually bounced off the 200 period on the 30-minute and then faded below it after hours. We decided that, okay, it's after hours, it's low volume. We had to take that with a grain of salt. Well, today we got kind of a more definitive, very short term. Again, the 30 minutes, a very short term chart. We got a more definitive downside break. We actually tested upside and failed and fell beneath that in the intraday session. So Nvidia did kind of give that up today. Okay. But we're now left in a really interesting situation where that 200 period and the 50 period are extremely close to one another. Right? You have the 200 period at 877 almost, and the 50 period at 881, 882. That's a very tight range for Nvidia, especially as of late. So, bulls. This is an interesting scenario. We now have an opportunity here to reclaim both in a single day because they're so close. That would be a beautiful thing to see. Bulls, what I'm looking at tomorrow, it's a 2.4 upside, or it's a 2.4% upside move away from testing the 50 period. I would love tomorrow to see a high volume rip up through both, and ideally do so in the intraday session. If we do in pre-market, you can see a fade in the intraday. I just want to see a rip up through on high volume, a retest, ideally intraday just to get that volume, and then a high volume pull away. Okay, very common setup that you'll see. That's a pretty decisive move out of the market when you see that high volume rip breaking a level, and then you get a lower average volume retest, and then a high volume definitive move away. That's a big sample size of the market coming in and saying, okay, we're going to reclaim that here in the short term. Now, bears, this is really simple for you guys here tomorrow. Any upside test of the 200 period, you may see the 50 period coming over and crossing over the 200 period, okay? Bulls, you just want to see a reclaim and retest of whichever one is higher at the time, and then a pull away. Bears, you would not mind seeing that faster moving average, that 50 period, crossing over to the downside, and then seeing an upside test of whichever moving average is lower at the time, and a hard high volume rejection lower. Okay, you wouldn't mind to see that at all if you're a bear, and you'd likely see some trades occurring, by the way, from active intraday swing traders more so in each of those scenarios. Now, let's move on here to the 4-hour chart and take a look. This one is extremely in play now. We can take a look here. We have had an intraday test now, and a very clean respect of that 50 period here on the 4-hour chart. Again, very common indicators on an incredibly common chart. The world is watching this one as well. Bulls, really clear here. You see that 50 period right at about 842, 843. Two things. Any downside test, going to want to see a hard high volume hold. We saw that today, right? We discussed this in the weekend video, and we saw that exact hold occur today on the 4-hour chart. But in addition to that, I would not mind at all to see that 50 period get above that psychological round number of 850 a share. Beef up that level a little bit. I would love to see that. Again, any downside test, high volume hold. Again, the ideal scenario would be that occurs above 850. And bears here on the 4-hour chart, two things. You'd prefer to see that 50 period stay below 850 so that the stock can break downside through 850 through the 50 period. And since you broke it fresh, ideally a retest on low to average volume, and then a hard high volume fade down, setting up for a test downside of $800 a share at some point. Would not need to occur same day necessarily. All right, now, the most important chart of all, that's the incredibly contextual, incredibly popular daily chart. Now you're looking at this and you're like, well, the moving averages are down at 670 and $500. You're right, they're not incredibly relevant right now, and that's not really what we're after. We're only after things that are relevant psychologically speaking. What are people looking at? And here on the daily chart, we always want the most simple story possible, because that's what has the most eyeballs. Now, here's the thing, bulls. We held 850 today. It was a little sloppy, but we held it. We certainly held 850. I want to see 850 hold here again tomorrow, ideally. Any downside test of 850, listen, I don't care if it goes to 845. This is a macro level. This is not an exact penny. I want to see a hold of 850 through until the close. By the way, when we're talking day-to-day perspectives like this, a 10-minute break is not definitive. I'm talking a full day test on a lot of volume throughout the entire day. Right, I want to see 850 hold into the close tomorrow, ideally. Bulls, we're just kind of looking for the highest psychological support that we can form possible, and then utilize that as kind of a trampoline to jump up back to that next round number. In this case, you're kind of looking at $900 a share, and is sort of up next. Bears. Priority number one here tomorrow, break downside through 850 and hold it. Again, if we break downside through 850 for 15 minutes and then break up above, it's not like, well, what happened? That wasn't a break to begin with. It's not a break and hold. You want to see a break downside through 850, ideally an upside retest, again, on average to below average volume, and then a hard fade below with a close below 850. You can start to use that as kind of a ceiling to reject off of down toward that next level, which is $800 a share. That's kind of the equivalent of a $900 share move for a bull, right? That's kind of what you bears would be looking at, $800. Again, when I say these things, we're setting up for potentially a multi-day move. This is not necessarily all have to occur in one day. That's asking for quite a bit, at least when you ask for that consistently. Now, a couple of things here. We did actually see a little higher than average volume here today on Nvidia. Not surprising considering the massive volume we saw on Friday's move. But, when you have a little bit above average volume and the stock holds, actually closing above the after hours low, but about 2% lower, not an incredibly big move in comparison to Friday's move. It held 850 on slightly above average volume on the day, right, after a big fade. A lot of people would say Friday was profit taking after that bigger intraday pull down, right? When you have moves like that, whether it's downside or upside, the other side's objective is to slow that momentum as much as possible. Okay, bulls, I would not go as far as saying, okay, we were only down 2% today, we're completely out of the woods. The big test, I think, is going to be the remainder of this week, depending on how the rest of this week goes as far as holding levels. I just want to see, one step at a time here, small steps to the moon, so to speak. A hold of 850 is a strong move out of the bulls day by day, but that a hold of 850 one day does not mean you can't give it up the following day. Take this one day at a time and just look for what you're looking for, the most obvious story each particular day. And then if you decide you want to be a little bit more active, you can maybe trade around a position, a very common thing to do. Implied volatility. Okay, IV actually, it spiked on Friday. It faded a little bit today. It is still high in relation to that, relevant trade time frame compared to the last couple of months for those shorter term trades. I'd say like 3 months and below. And just remember, guys, the higher IV is in comparison to your intended trade time frame, the higher the potential risk of IV crush, because you have equilibrium in that period of time, kind of down in this region. All right. Now, my favorite part of every video here, let's take a look. What was the bias out of the options traders here today? This is all just from today, Monday, as we head into, as traders position themselves heading into tomorrow, Tuesday. 1.35 million total contracts traded. That's a pretty decent sample size here on Nvidia. 1 million plus, we can get some great data out of that. 811,000 of those were calls. 541,000 of those were puts. Now, if we break this down by time frame, delta range, right? We have the out of the money, the at the monies, and the in the monies. Okay, on average, the expiration is going to change. So on average, you have a shorter term sentiment, more of a mid-term sentiment, and a longer term sentiment. All 5 delta ranges here today, leaning, call, heavy. The one I'm primarily interested in, as you guys know, is that 0 to 20 delta range. Those are, on average, again, going to be the most short-term speculators. Okay, those are those far out of the money, cheapy, on average, a lot shorter dated, gambly style calls and puts. Those on average are going to be the people placing bets in the shortest term. We have 349,000 approximately calls and 248,000 puts. So not only are we seeing a call side bias on the overall call put ratio, but we're also seeing that occur out of the short-term speculators. As always, make sure your risk is managed. This is one factor, and the options traders can of course be wrong. Guys, make sure to leave your vote before you head out in the comment section down below. Comment the ticker or name of the company that you would like me to cover as the wildcard stock tomorrow, Tuesday's batch of videos. That will be voted on in today's batch of videos. Whichever ticker gets commented the most across all the videos, I will cover as the wildcard stock tomorrow. So make sure to leave that in the comment section. And hey, if you got value out of this video, please subscribe to the channel. I greatly appreciate it, and I'll see you in the next one.